Recession warning, understanding the wealth code of economic cycles. When GDP has been in negative growth for 6 consecutive months, economic recession is like a lurking beast. In 2008, I made $1.37 million through precise prediction, and now history is repeating itself. First, remember this common sense truth. A recession is not a disaster but a window of opportunity for the redistribution of wealth. List of signs of recession identification. Data signal, asterisk. The manufacturing. PMI has remained below the 50-point boom-bust line for 3 consecutive months. Before the 2007 subprime mortgage crisis, the U.S. PMI plummeted from 56 to 48. In 2008, the shopping mall near my home went from full occupancy to 30% vacancy in just 4 months. Before the recession in March 2020, gold soared by 8% in a single day, and the 10-year U.S. Treasury yield fell below 1%. Market anomaly. Gold and U.S. Treasury yields rose in tandem. Life's perception. The vacancy rate of shopping malls has risen, and recruitment advertisements have decreased. In March 2008, I did 3 things. #2. 3 major challenges to break through. The turning point from crisis to profit. Challenge 1. Stock market. Game. Picking up bargains and panic leverage control. Use 20% cash for covered options and earn a 3% premium per month to hedge risks. The final position building cost is 8% higher than the lowest point, but lower than that of 90% of investors. Most people make 2 mistakes in the stock market: chasing high prices during prosperous periods and cutting losses during recessions. 1. Cash reserve. Sell 30% of high-value technology stocks and hold $2 million in cash, waiting for the right moment. 2. Batch position building. Buy 5% of the S&P 500 position every 5% decline. 3. Golden triangle for stock selection during recession. High dividend, Procter & Gamble. Dividend yield reached 4.5% in 2008, and its stock price drawdown was 22% less than that of the broader market. Central consumption, Walmart's revenue grew by 7% against the trend during its recession, as people cut back on non-essential spending. Debt health, Companies with a debt-to-asset ratio below 30% have a survival probability 4 times higher than those with high debt. And 1 share of highly liquid assets. Challenge 2. Cash flow defense battle. Keeping revenue. Against recession, and the bad debt rate dropped from 8% to 1.2%. In 2007, when I sensed a crisis, I immediately adjusted my income structure. Closure and expansion, Close 3 profitable branches that require a large amount of cash flow. In 2009, I completed an asset upgrade with $1.5 million. Service transformation. Convert physical products into subscription-based services. And increase the customer renewal rate from 65% to 89%. After 3 years, when the company goes public, the return is 27 times. Side business development, developed a corporate layoff response course within 3 months, selling 23,000 copies during the decline period. Auction property bargain, purchased 3 properties with outstanding mortgage payments at 65% of the market price. Renovated them and rented them out. The rent covered the monthly mortgage payment, leaving 4,200 yuan. Convert 30% of the cash into high-quality properties. Purchase a school district property with an annualized appreciation of 12%. Cash flow first aid kit. Rule 361. Set aside 3 months of living expenses, 6 months of emergency funds. Accounts receivable management in 2008. I required customers to prepay 30% of the payment for goods. Skill monetization, turning core competencies into online courses. A friend of mine earns 47,000 yuan per month through a crisis negotiation course. Due to the price increase of new bags, second-hand ones have become an alternative choice. Challenge 3. Bottom fishing of assets. Building the foundation of wealth with low prices. The most valuable thing during a recession is the option. 1. 2. Enterprise equity asterisk. Invest in a logistics company on the verge of bankruptcy. Using the debt plus equity model. 3. Commodities. Buy ETFs when the crude oil price is $33 per barrel and sell them when it rises to $78. 6 months later. 3. Roadmap for wealth appreciation during recession. Warning period. Sell high-risk assets, with the cash ratio increasing to 40%. In 2008, I made a profit of $280,000 by selling Tesla options. Panic period asterisk. Purchase index funds in batches and increase. Positions every 10% decline. The average cost of establishing a position in the S&P 500 is 1,120 points. Recovery period ### for opportunities for ordinary people to make a comeback. 3 years later, its valuation increased 12 times. 1. Side hustles become essential in 2009. I cut 40% of SKS, but profits increased by 17% instead. In November 2008, I hung the slogan, "Crisis equals danger plus opportunity" in my office, and the team's efficiency increased by 30%. Low cost and high return project. Second-hand luxury goods refurbishment. In 2008, the profit margin of purchasing and selling LV bags reached 45%. Financial health check. List all assets and liabilities in Excel. Calculate the current ratio and adjust immediately if it is lower than 2. Simulation exercise. Suppose you lose your job next month. Calculate how long you can hold on and fill the gap with side hustle 1, while that of the surviving Goldman Sachs was kept within 12 times. Now open your bank statement and cross out the unnecessary expenses for next month. 6 months later.
Ow!
You will thank you for this seemingly stingy decision today. Remember, an economic recession is not the end of the world, but a season of wealth revelry for a few. Enterprise consulting slice. Turning the layoff experience of large companies into a 9.9 yuan micro lesson. An HR made 30,000 yuan a month with this. 2. Skill leverage. Anti-recession skills list. Short video editing, debt restructuring planning, home repair. The demand for DIY has risen, and a certain technician's hourly wage has increased from $50 to $120. 3. Information gap arbitrage. Arbitrage formula in the recession period. 1. Use Chichacha to find the list of bankrupt enterprises. 2. Contact creditors to acquire debts. 3. Negotiate debt-to-equity swaps with enterprises. In 2009, a friend of mine acquired a 15% stake in a catering brand through this. V. The iron law of survival in the decline period. 1. Reject leverage. The leverage ratio of Lehman Brothers, which went bankrupt in 2008, was as high as 31 times. 2. Focus on the core. Shut down unprofitable business lines. 3. Stay optimistic. During a recession, emotions are more important than data. Action list 1. 2. Opportunity list. Write down the demands that may explode during 3 recession periods. 3. When others were anxious and sleepless during their decline. I wrote in October 2008, "The best time to invest is when the streets are filled with blood, even if that blood is your own."